Welcome back to the channel, everyone. Today I want to talk about how and why the Fed is crashing the market and inflicting more losses on purpose. So stay tuned and let's make some money. But before I dive in with the key information, you may have noticed the new AMC neon sign that I have in the background. If you want to get a sign for yourself, I'll be sure to leave the link down in the description below. The seller also has tons and tons of other neon signs as well if you don't fancy an AMC one. There's other stock and GameStop related signs and just tons and tons of other neon designs. And now I want to dive straight in with the key information. So, this article came out a few days ago that says the Fed must inflict more losses on stock market investors to tame inflation, says a former central banker. The former New York Fed chief said the Fed will have to shock the market if financial conditions don't tighten. And he says it's hard to know how much the US Federal Reserve will need to do to get inflation under control. But one thing is certain. To be effective, it will have to inflict more losses on stock and bond investors than it has done so far. He said there's a myriad of uncertainties that the Fed must navigate, including the effects of easing supply chain disruptions and a historically tight labour market. And he said, but the effects of the Fed's tightening of monetary policy on financial conditions and the effect that tightening will have on economic activity is one of the biggest unknowns. And he said if financial conditions don't tighten on their own, which he said seems unlikely, the Fed will have to shock the market to achieve the desired response. That would mean hiking rates much higher than the market participants currently anticipate, because the Fed, one way or another, to get inflation under control, will need to push bond yields higher and stock prices lower. And the White House just come out and said that it expects inflation to be extraordinarily elevated in the new report. Now, obviously, this doesn't bode well for those financial conditions tightening, because for financial conditions to tighten, inflation must shrink and not be extraordinarily elevated. Last month, back in February, we saw inflation of 7.9%. I personally expect March's inflation to be 9% or above, and many of the large banks like Credit Suisse, Morgan Stanley, Citibank, Goldman Sachs, and many others are expecting inflation of 8.5% and above. Now, considering the White House came out and said that it expects inflation to be extraordinarily elevated, we could potentially even see inflation levels of 10% and above. I did say the other month that if we start seeing inflation above 9%, this could be absolutely disastrous for the stock market, and we will most definitely see a stock market crash. And the White House said that we expect March CPI headline inflation to be extraordinarily elevated due to President Putin's price hike. So the February reading showed the benchmark index rose 7.9% over the last 12 months, the highest level since 1982. But the White House press secretary said that the Labour Department's previous report, which showed those dramatic rises in February, failed to include the majority of the jump in oil and gas costs caused by the Kremlin's unprovoked invasion. And therefore, even though February inflation was high, this inflation data basically did not include any increase in the price of oil and gas, which has obviously been going absolutely crazy over the last few months. The prices of oil and gas were spiking even before Russia's unprovoked invasion of Ukraine, but this has just set it to whole new levels. Now, I do believe these March inflation readings are going to be absolutely off the chart, and I do expect the S&P 500 to be red for the next few days, maybe for the remainder of the week. And Vic Soin said if we break the neckline, then a full measured move to around $3,700 is inbound for the SPX or the S&P 500. So you may have noticed that actually since July of 2021, the S&P 500 has been forming a head and shoulders pattern. So back in July of 2021, we formed the first shoulder. The head was then finished around March, and over the last few weeks, we've started forming this second shoulder. And if we fall back below this neckline around $4,300, we could see a move all the way down to $3,700 or a further crash to pre-pandemic times. Now, I think if the S&P 500 falls past this neckline to 3,700, let alone fully crashes to pre-pandemic times, we could very much likely see many over-leveraged hedge funds being liquidated. And obviously, if we're seeing tons of these hedge funds being liquidated, AMC is almost certain to squeeze. We've already seen Melvin Capital losing 33% for 2021 and another 20% on top of that in Q1 of 2022. We've also seen Citadel and Point72 withdraw their investments from Melvin Capital, so it won't be long until Melvin is completely liquidated. And obviously when Melvin Capital is liquidated and forced to sell off their long positions and forced to cover their shorts, we will most definitely see an AMC and GameStop squeeze. Now, John Hussman has also drawn some scaring similarities between the 1987 market crash and right now in 2022 in the 10-year Treasury yields. And guys, if you didn't already know, MooMoo have just increased their offering of free shares now to 6 free shares valued up to $3,500 each, which is a total of up to $21,000 of free shares just by signing up to MooMoo using the link in the description below and making your first deposit. MooMoo and Futu have also just officially announced that Futu does not accept payment for order flow, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. MooMoo also recently won the award for being the best trading platform at the FinTech Breakthrough Awards. MooMoo is incredibly easy to use, it's very customizable, and it will help you to trade like a pro. MooMoo also has tons of technical indicators and advanced charting tools. MooMoo publishes daily short selling data, position cost distribution, and much, much more. So guys, be sure to sign up to MooMoo using the link in the description below to get those 6 free shares, because at the end of the day, everybody loves free money. Obviously, back in 1987, the yields were significantly higher, rising from 7% to 10%, whereas right now it's only increased from 0.5% to around 2.75%, but the chart is scarily similar. These Treasury yields have obviously been going vertical over the last few months, and that's what's causing these yields to invert. I do expect these Treasury yields to continue increasing right up until we see a 2022 market crash. Now, something I've also found very, very interesting that's been unfolding over the last few days is Bill Pulte's investment in GameStop. Obviously, back in September of 2021, Ryan Cohen tweeted saying talk is cheap, it takes money to buy whiskey. And Bill replied saying I don't drink whiskey, but I am buying. I've just made a 6-figure buy on GameStop. He then tweeted some emojis of an ape and a money, aka suggesting that the AMC and GameStop apes will be getting rich. And then he later tweeted saying, wow, I didn't expect so many people to try and stop me from promoting Superstonk and the GameStop community, but I was warned by them that I would be attacked for it. He said, it's okay, I do have thick skin, bring it on. Oh, and I still support Superstonk and GameStop, and nothing's going to change that. He then also posted on a Reddit AMA saying, thanks, I did get contacted by a hedge fund today asking me what I was doing with GameStop and encouraging me not to buy the stock. I'm sure they, and or maybe their consultants, are trying to figure out how to attack me. I do think it's brilliant that the AMC and GameStop movement is getting more and more attention, considering that Bill Pulte has around 3.2 million Twitter followers. But it is also scary how large names like Bill Pulte are being attacked by these hedge funds trying to convince them to not buy GameStop and not talk more about GameStop on their social media platforms. I think something of interest is that Bill Pulte actually has a net worth of around $100 million, and therefore I don't think it will be long until a few very, very high net worth individuals end up catching more wind of the GameStop movement and decide to get involved. It'd only be a fairly small investment for some very large high net worth individuals like Elon Musk to buy tons and tons of shares, practically the entire float of AMC and GameStop. And finally for now, I wanted to quickly warn you again about Robinhood. If you haven't already moved your shares away from Robinhood onto another trading platform like MooMoo or Fidelity for example, I would really advise you do it, especially now. Apparently Exempt tweeted saying 2 of our members received this email today. Robinhood, do you want to comment if this is related to your data breach a few months ago, or is this a new data breach? He said, are users safe from getting their data stolen, besides getting their buy button stolen? So 2 members or friends of apparently Exempt received an email saying, hi, ID Notify detected a match to your email address because an email address had been leaked directly from Robinhood. It says that Robinhood was the potentially breached site that leaked an email address and could potentially have leaked their password and personal information as well. Considering that very, very often Robinhood is linked directly to your bank accounts, it would be advisable to close down your Robinhood account and move to a different trading platform if you haven't already. If Robinhood has yet again had their data breached, it really doesn't say too much for the platform or for their security and privacy of users' data. Guys, be sure to let me know down in the comments below what you think about the Fed crashing the market on purpose. And as always, guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.